Alright, this should just be a quick update and a quick announcement is I don't think I'm going to be having any video updates for about a week. However, I will still be doing all of the updates in the Discord server just as you're used to. There just will not be any video updates. Also, I just put out a video this morning that's called How to Trade Price Action. Be sure to go watch that episode because I think it's going to help you to understand what it means to let the price action do all the talking, following price from these critical levels. Alright, so quickly, let's look at the market. We're going to do this very quickly, and I'm only going to highlight what I think you should be focused on. And on SPY, I think you still need to focus in on this range between 404 and 417. This is a range that we've been in since the beginning of April, and we're likely not going to see any major moves in the market until we break out of this range. So for that reason, I would wait until SPY breaks out above 417 to get more bullish. And if we break that level, we will be looking for the August highs that could take us back to 430. And to get more bearish, we need to break down below 404. And then we'll be looking for a retest of the 200 daily moving average and to close that gap. And then once we get there, we'll have to see if that level holds up as support or not. In between that breakout, we are simply in this range between 414 and 411. And if we break that range, we're looking for the gap fills at 415 and 407. Anything outside of that range is going to be the broader range that we need to break from. So hopefully by the time I get back, we're out of this range and we no longer have to talk about ping-ponging between these levels. Then jumping over to the triple Qs, you can see that we're not in a range and we're actually in a strong bull trend, and that's indicative of the strength in the big tech companies. We're very close to my double bottom price target at 327, and then above that, we're looking for the August highs. So there's really nothing else that needs to be said in the triple Qs other than to just manage your risk at the breakout at 321. As long as we're above 321, we're still trending higher, which means we're trending higher towards the 330s. If we break down below the support at 321, then we look for the gap fills at 315 and 308. And then quickly just looking at the Dow, you can see relative weakness in the Dow Jones. Even though we do have the bull trend in the triple Qs, the big tech companies are carrying the weight and the Dow Jones is looking relatively weak with this lower high, lower low breakdown, and we likely are going down to fill that gap and testing the 200 daily moving average. Really don't need to get bullish in here until we can clear 337. And then on the small cap, same story as the Dow Jones, looking weak below the resistance trend line, below all of the moving averages, and we do have this gap to fill down here right around 171. And we have this giant head and shoulders pattern if we break the neckline at 170, which will take us back down to the 52-week lows. So again, you're seeing a lot of strength in the big tech companies, but you're just not seeing in the other indices. And that is telling us this is not an everything rally, and it's not a very healthy market, which is why I suggest waiting to get bullish until SPY can clear 417. And then in the VIX, we still have this low fear bull trending environment as long as the VIX is below 20. But if the VIX spikes out above 20, you instantly need to get more risk off because we're going to see volatility yet again. And that does mean the bear market can return, but we need the price action to prove it with the VIX breaking above 20. As far as Bitcoin goes, watch that support at 27,000 because if we break below it, we're likely coming back down towards 24 to 25,000. And you can see this does look like a confirmed double top and a head and shoulders pattern if we break down below that neckline. On Google, we reached the price target at the top of the channel today. Let's just call it 117. And we now have the gap to fill down here at 113. So even though Google can continue to go higher, I think the upside risk is going to be limited. And if we do continue to go higher, we'll be looking for the next strong resistance at 120. But overall, we're reaching the price targets, and that means we're likely due for a cool down. We have the same story in Apple stock, reaching all the price targets, and now we're reaching into the August highs. So even if we do break out, there's not really a lot of upside before we need to do some backfilling and testing of support. And then Amazon stock, very similar sign as Google, starting to break out and very close to my price target at 115, which again is going to be resistance, and we now have the gap to fill down here below 107. So just be cautious as a lot of these stocks seem to be hitting our price targets, which means they're likely going to be due for a pullback. And then Tesla stock is also looking more bullish with the bounce off 167, but we still can't break 173. If we break 173, then we're getting more bullish for the gap fill above 177. And as you can tell, it does look like we could be trying to break out, but we need confirmation and to continue to hold these higher lows and higher highs. So jumping back over the S&P 500, this is a very difficult market because it's very mixed and it is stuck in a range, which can be very difficult to trade if you don't know how to trade a range. But simply said, you shouldn't be expecting any large moves in either direction until we break out of the range. So if you're trading, just trade between support and resistance and don't take on too much risk. Just to remind you, there will be no more video updates for about a week, and all of the updates will be in the Discord server. And don't forget to watch that episode on how to trade following price action. If you want to join the Stocks Channel Discord, you can find out how to do that by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.